And thank you for joining us. You're listening to the Beyond 50 radio program. I'm Daniel Davis, your host. Joining us here on the program today, to talk about what's going on here with the economic crisis. Our guest today, for more than 32 years, has been the best-selling author of a financial book simply titled How to Prosper During the Coming Bad Years in the 21st Century, and has made a career out of finding big opportunities and bad news and turning straw into gold. So we're going to talk about that today and see if we can find out what we can understand about this crisis and how we can find the opportunities here so that we can prosper as well. And I'd like to welcome to the Beyond 50 radio program today our guest, Howard Ruff. And Howard, how are you doing today?
Well, it's a little early to tell.
It's a little early to tell. I can see that. Well, let's talk about this crisis. It seems like it's getting worse and worse with this whole bailout situation. How do you view what's going on here?
Well, what happened is that this crisis is politically manufactured. I don't know if it's manufactured on purpose or just through stupidity, but it's politically manufactured. If Congress wants to know what caused it, just go look in the mirror.
Right. So when you say politically started, how did they actually put this whole thing together, whether it was inadvertently or directly?
Well, I don't have very high regard for how smart they are up there in Washington. I think there's an IQ test for Congress, but nobody's ever passed it.
Mm-hmm.
But what I think happened, the basic problem is that it's a combination of problems, really. First, the Congress decided that they could get a lot of votes by allowing people to get mortgages that otherwise wouldn't qualify either by bad credit or not enough income or no down payment. And so starting in the first rumblings of that were in 83, and then again in 92, they passed laws that required banks and lenders to approve mortgages that they had in the past turned down. And so all of a sudden, all the mortgage brokers said, gee, that's great because we can get approved lending on mortgages that we couldn't get before. And that really caused a huge bubble in the real estate market in certain parts of the country, like Southern California, Arizona, Florida, etc. And what happened is that a lot of these people who were signing these mortgages didn't even read the small print, found out that if interest rates rose, that it bumped up their payments. They couldn't make them. So what happened is that first the bubble blew up, got way beyond the real value of homes. Mm-hmm. And the second thing that happened is all of a sudden people found they couldn't make their mortgage payments. And so the default started. In the meantime, the banks had bundled up these mortgages into bond-like instruments backed by mortgages, and the credit reporting agencies gave them AAA ratings because it was backed by real estate. And so they bundled these things up into bond-supported securities, or real estate-supported securities, and all of a sudden banks all over the world started buying them and putting them on their balance sheets based on their AAA rating. Well, when that happened, and they found that some of these bad mortgages started defaulting, all of a sudden there was real doubts about the value of the holdings in these bonds, and they had eaten their way like termites into the balance sheets of the major banks and major brokers. Well, when that happened, all of a sudden they couldn't determine the value of them because they didn't know how to evaluate them. And so the third thing that happened is that there had been a change in the accounting rules that they had to mark to market, as I called it. Now, mark to market means that they have to determine the market value of these instruments. And so all of a sudden, if there was no bid, no ask for them, because of the doubts about their value, all of a sudden the mark to market, they had to mark it down in many cases to zero. Mm-hmm. And so all of a sudden balance sheets started disappearing from banks and brokers around the country and around the world for that matter. And when that happened, and all of a sudden they found that they didn't have the strength in the balance sheet to support the lending they wanted to do, all of a sudden they had to start raising cash somehow but they wouldn't loan to each other because they didn't trust the value of their balance sheets. Mm-hmm. So altogether, this has created a messy problem. And so some of the biggest banks and biggest brokers in America, like Merrill Lynch, and they all of a sudden started disappearing because they didn't have anything on their balance sheets. And so, that happened virtually overnight. And so this started the crisis, really, and that's so banks wouldn't lend. They wouldn't lend to each other. They wouldn't lend to individuals. They were afraid they had to keep cash. And all of a sudden, if banks stopped lending, the way the economy is structured, the economy will start collapsing. Small businesses need loans. The mortgage brokers need loans. The housing had broken down. And when housing prices started falling, and that was the inevitable result of all this, the party was over.
Mm-hmm. You know, it seems in this whole thing, especially when it comes to Main Street America, that they're kind of pointing their fingers in the direction, as you were saying earlier, into Washington, big business. It's everybody's fault. But it's interesting that it doesn't seem that Main Street America is taking any responsibility for that. Do you think that they should be?
Well, that's well put, because it's everybody jumped on the bandwagon. First, it was Congress that created the problem. Mm-hmm. The second thing is all the brokers and bankers realized that the rules have been changed so they could get a lot more mortgages. Mm-hmm. And so they jumped on that bandwagon. And then the people that were buying the mortgages or were getting the mortgages and committing to them weren't reading the small print, didn't realize that they were vulnerable. And so it was a Main Street problem, a congressional problem, and a Wall Street problem altogether. Mm-hmm. And so we've been attacked from every direction.
Mm-hmm. You know, it's interesting, Howard, is just the other day I was talking with someone. I happened to be in a restaurant, and I seen a card, believe it or not, sitting in front of her, AIG. And I just couldn't help, but I went over and I said, do you ever find that if anybody takes a look at this card that you kind of feel like you want to duck? And what she was talking about, actually, is that she was an investor in the AIG Corporation, which is, as everybody knows in this whole thing, is at the forefront. It's in the news. People just want to lynch this company. And she says it was interesting what was being told to me by her, and there were two other people sitting with her, is that they had come to understand, and I don't know whether this is true or not, that it was actually a component of AIG out of London that really kind of caused a lot of the problems. And she said there are many good divisions of AIG. What do you think about something like that? You know, because there was that finger pointing, it was them in London instead of us in the United States kind of a thing.
Well, it's easy enough to look at that and say, hey, it's finger pointing. But I don't, frankly, I'm like most American experts, don't really understand exactly what was going on. But the AIG in the headlines today is simply because Congress has given them so much money, they own about 80% interest in it. And you can't take money from Congress without strings. There are strings attached. And so they feel that they can now make business decisions for them, control their, for example, their bonuses. And a lot of these bonuses were committed long before these problems happened and were necessary to be competitive, to attract good people working for them and the associates who help to produce business for them. And so and now Congress has decided that, hey, they can make a lot of points by talking about bonuses paid with tax money, which is not exactly what happened. And so they're a popular whipping boy. My personal opinion is there's not one person in Congress has enough business experience to make business judgments for anybody, and that's a business judgment.
Mm-hmm. Now, it's fascinating because you have a newsletter that more than 600,000 people have read since you had started it, and you show people and have talked with people through your experience how in times like this that there are true opportunities out there for people, especially in middle class or, you know, even lower income, to be able to prosper in a situation like this. And it's funny because even my wife and I, as much as you hear all this bad news about how bad the economy is, we kind of see more opportunity than we actually see what they're saying in the news, and it seems to me to be like a psychological thing. Like just because the economists and all that say that it is, does that mean that there are no opportunities out there? What are some of the things that you would suggest to people today that they should consider to find these opportunities to be able to prosper in these bad times?
Well, before I answer that question, let me just comment on the general attitude of people.
Mm-hmm.
The pessimism is pessimism over the old world, the world as it was before all this happened. In other words, when economies and markets reach major turning points, there are always opportunities and chances to make a great deal of money. And so the thing that I've done over the years is really kind of zigged when the markets were zagging to find opportunities. I'm an optimist, regardless of my reputation. I am an optimist. I think there's silver linings or gold linings in these dark clouds. And so what is happening?
It's raining gumdrops.
There you go. Like the old story of the child came down for Christmas morning and found a big pile of manure under the Christmas tree and dove into it because he was sure there was a pony in there somewhere. That's the old Ronald Reagan story. But the point is, I think there are great opportunities now, and this, it's like Yogi Berra said, this is deja vu all over again. The same thing started happening at about 2003. I was, for example, bearish on precious metals, gold and silver, for most of the 32 years I've been in business. I've been bullish on them for about 11 of those years. But I got my start back in the 70s when we were having a real run-up in the metals. For example, I got my subscribers into gold around $105 to $120 an ounce. We got out about $750. Silver, we got into under $2 an ounce, and we got out at $35. So there were great opportunities, but the stock market was in trouble. But now this time, not only is the stock market in trouble for the same reasons, and the reasons are very simple. It's a monetary phenomenon. You create too much paper money, you're going to diminish its value. You're going to dilute it, and that started happening again early in this century. And so I turned bullish on the metals, and because it was right, and it was the right thing to do. But it was not Wall Street wisdom. Wall Street gets their commissions based on selling stocks and bonds.
Right.
And so to them, there's all a horrible catastrophe because it affects their marketplace, the thing that all their incomes are based on, and it affects so many millions and millions of investors because that's where they put their money. That's where their 401k is, for example, and their IRAs, and so that to those people who are not willing to abandon the conventional wisdom, it's a catastrophe. For those who are willing to abandon the conventional wisdom, there are great opportunities, marvelous opportunities. In fact, you could take small amounts of money and turn it into genuine fortunes. Now, to answer your question about what do you do about this, there are a couple things you have, a couple of principles underlying this. Number one, despite the fact that we're not having a big inflation right now, in fact, we're having deflationary problems, we have to recognize that there's inflation in our future. Why? Because when you get deflation, which is synonymous with depression, Congress is going to fight it because they don't want depression. They want to fight deflation. So the only way they know how to fight it is to throw money at it.
Right.
Well, they're creating literally trillions of dollars, and the Federal Reserve is very, very accommodating. And so once that money is placed into the banking system and starts circulating, which it will sometime in 6 months or a year from now, all of a sudden you start getting big-time price inflation. And I believe that the money we've created dwarfs several times over the amount of money they created to cause the inflation of the 70s, which drove certain investments to new highs. So I think the dealing with inflation in our future, in our near future, is the problem. Like Will Rogers said, invest in inflation is the only thing that's going up. And I think he said it as a joke, but hey, there's more truth than that.
There certainly seems to be, isn't there?
Well, it will be, but not yet. So the time to invest in inflation is before it starts. So you're taking advantage of it when it comes along, sweeps your wealth along with it. But this time, it may be worse than that. It may be not just an opportunity to make money. I think they've created so much money, they may be literally destroying the value of our paper currency. The world is littered with dead paper currencies over the years, and any paper currency has a life of about 75 years, and we're on borrowed time. And all this that they're doing, all this money they're creating, may actually destroy the dollar. In fact, I was reading an article today on the internet that some international monetary authorities are now talking about abandoning the dollar as a worldwide currency, and so the dollar may be destroyed, and the only time to invest in that is before it happens. So I'm suggesting that people can take a look at the investments and see what makes the most sense in investing in inflation. And as always, investing in inflation throughout the centuries has always been gold and silver. Gold and silver coins, gold and silver bullion, mining stocks, and so forth. But the ultimate protection will be actually holding the bullion coins and the bullion in your own possession. Because it's not just a question of how much money do you want to make. Now it's a question of protecting the value of all your assets.
Right. Well, and that's key. I think that a lot of people, you talk about most people, especially this day and age, who fall into the fallacy, if you will, or the possibility of this being a bad economic time, or probably the worst there is, that the economy is just going down the toilet. And they don't realize that in following conventional wisdom, as you said, the reason it's bad is because you've bought into the conventional way of investing your money, for instance, through 401ks, KIOs, IRAs, those conventional things that the government approves, but then they control, and they end up controlling your money. And people never take the time in that conventional wisdom to look into the matter and understand it more. And they don't realize that what you're talking about here, that this matters, that in inflation, when you go out to buy a pound of hamburger today, for instance, it's $2 a pound, but a year from now it could be up to $5 a pound.
Well, you want to know how to beat inflation? The first step to take is if when you have inflation, prices are going to go up, right?
Right, absolutely, because people think that there's more money, so they think they can charge more. Exactly.
So what happens is not just that; it's because the value of the dollar is diminishing. That's what's happening. Prices aren't really rising. That's the way it seems to be manifesting itself. But what's happening is that the dollar, the currency you're using to buy things, is diminishing. It's worth less and less. We've been in a slow motion inflation for probably a century. Right now, a 1 ounce of gold, for example, would buy the best suit in town 2 pairs of pants. And today, 1 ounce of gold will buy a suit of clothes with 2 pairs of pants again. But the only problem is that back then it was only like $20 to buy it, and today it's several $100s. In other words, it's the currency has lost value. That's what's happened. And so but when inflation is rising and it appears prices are going up, there's some defensive moves that every family should take that has nothing to do with investing, or only indirectly to do with investing. For example, prices are going to be going up everywhere. So if you have a store you go to fairly regularly, whether it's groceries or whatever it might be, they're going to find trouble. They're going to have to raise prices. You're going to find that those shelves that get magically restocked overnight because trucks pull up to the back door, all of a sudden can't happen because the truckers are going to have trouble with the price of oil and price of fuel, staying in business. They're going to go broke. Consequently, you cannot depend on going to a store and buying what you want, whenever you want, at a price you want to pay. So I suggest that you start stocking up on this stuff in your personal portfolio. Don't, when you go to the store and you want to buy a can of tuna, don't buy a can, buy a case and store it away somewhere. And because that means that you will so buy low, sell high is a pretty good piece of investment advice. But what happens is that now you have buy low and consume high, because you'll be buying it at today's low prices and consuming it at tomorrow's higher prices. So I suggest that the storage of commodities range not just food, but diapers and soap and motor oil and so forth, the things you buy on a relatively regular basis. You ought to be start stockpiling these things. That's basically a defensive position.
I know that in your book that you also talk about resources that people can follow as far as doing exactly what you're suggesting. What are some other elements that people should consider in this time to be prepared and actually be able to prosper as everybody else is trying to figure out what they need to do?
Well, the first thing you should do is get yourself out of debt and get some funds, as much liquid funds as possible, so you can take advantage and be able to jump while it still has value and while you can still exchange it for goods. So I think that makes a lot of sense. Ironically, though, there may come a time when you might be able to pay off your debt with a day's work, when the prices, the value of the currency has shrunk, but the commitments you have to pay debt are not. They hold their value. They're just the same. Your mortgage payment will stay the same, but the value of the dollar will go down, and you may be able to take advantage of this inflation by using diminished dollars to get stuff out of debt. But that's down the road. That's not now. My job as a financial advisor is to stay ahead of the trends. Mm-hmm. That's what I do. That's what I do for a living. And I think and that's what I've been doing for a living for like 33 years now. So I think but right now the objective is get out of debt so you're liquid and have funds to do what you need to do with. The second thing I think everyone needs to do is to go to your local coin dealer and buy bullion-type coins, silver and gold, with emphasis on silver. Silver is going to be more valuable than gold because when gold reaches a certain point, over $1,000 an ounce, a lot of people can't afford to buy it, but they can afford to buy silver, which is a lot cheaper per ounce, and so consequently it has the most upside potential.
The book is How to Prosper During the Coming Bad Years in the 21st Century, and our guest today is Howard Ruff. Now, Howard, as you take a look at the news, and here's Obama, and he's fighting against big business, it seems, and big business is fighting back, and everybody's criticizing everybody, you have to step back and ask yourself, we know how we got into this mess, it seems. We keep doing the same thing over and over again. What would happen if we just changed course and didn't repeat these cycles, or is that even possible?
You're dreaming. Look,
somebody's got to do it. It's the American way.
Yeah, but the first thing we've done is to find out. We now know who caused the problem, and we put the same guys who caused the problem in charge of solving the problem. Is that stupid or not? I think that's really dumb. But incidentally, you mentioned the book. Would you like to know how you can get a book free and rip me off?
Absolutely. We'll go ahead and let our listeners know about that.
Okay. Well, first thing you do is go to my website, which is roughtimes.com, www.roughtimes.com, and there you can find all about my newsletter, The Rough Times. And when you sign up for The Rough Times, you pay $165 a year for it. We send you a free book. And then you decide after a couple of issues you don't like The Rough Times, you cancel out and keep the book.
Oh, wow.
How's that for a deal?
Sounds like a pretty good deal to me.
Well, I've been paying off on that. There's about 4% of the people decide they don't like it for you because they don't like my politics or whatever. Mm-hmm. And and they do that. But I've been doing that for a long time, and it ends up about 4% of the people are actually dumb enough to do that.
Well, the book is How to Prosper During the Coming Bad Years. And Howard, please go ahead and give out your website again.
That's www.roughtimes.com.
Well, thank you. It's always it's a pleasure to talk with you again, and just to kind of take a look at all this and realize, continuing with the madness is only going to perpetuate more madness. So stay still and just see the opportunity, so you're not as nuts as everybody else is.
Okay, well, let me leave you with a thought. The world has changed dramatically. The old world is dying or is dead, and and the new world is unpredictable. But the one thing that will persist and has done so for thousands of years is precious metals. Those things, they're not always good investments. In fact, I've only been bullish on precious metals about 11 out of my 33 years, because my job as a financial advisor was to make people money. And there were times when it was a bad investment, when the fundamentals weren't there. But all the fundamentals are in place for a real runaway market in these metals. And while the stock market investors are crying over their 401ks and their growth mutual funds and the Dow Jones, we're going to be cheering over what's happening to our portfolios.
Well, again, Howard Ruff, it's been a pleasure to talk with you. Thank you for joining us here on the program today.
Thank you.
You bet. So there it is. Go to roughtimes.com and find out more about Howard Ruff and his book, How to Prosper in the Coming Bad Years. Thank you for tuning in. You've been listening to the Beyond 50 radio program. Be sure to visit us at our website at beyond50radio.com and sign up for our free weekly e-newsletter. I'm Daniel Davis. Thank you for tuning in. And remember, live your day past halfway.